Greetings everyone. My name is Maruthi Yadav. Today we are going to discuss McDonald's Corporation and a detailed company analysis of the same. The ticker symbol is MCD and the stock exchange is New York Stock Exchange. Is trading at $308.69. The link to the Excel sheet that contains the financial ratios, the capital structure, WACC, and the beta calculation is mentioned here. And Introduction to McDonald's Corporation. McDonald's Corporation is a global food service retailer operating and franchising restaurants worldwide. As one of the most recognizable brands globally, McDonald's serves a locally relevant menu of quality food and beverages across 100 countries, more than 100 countries. The company commitment to accelerating the Arches strategy, focusing on marketing, core menu, digital presence, delivery, and development, underscores its ongoing effort to enhance customer experience and drive profitable growth. With a significant portion of its restaurants being franchised, McDonald's leverages a business model that combines global brand strength with a local entrepreneurial spirit. History of McDonald's Corporation. The McDonald's story began in 1940 when brothers Richard and Maurice McDonald opened a barbecue drive-in restaurant in San Bernardino, California. Recognizing that their hamburger sales were the most profitable, they streamlined their operations in 1948 with a speedy service system, which emphasized efficiency with a limited menu featuring 15-cent hamburgers. This innovative approach laid the foundation for the modern fast food concept. In 1954, Ray Kroc, a milkshake machine salesman, was impressed by the brothers' operation and envisioned the potential for a nationwide chain. He became their franchising agent and opened his first McDonald's restaurant in Des Plaines, in Illinois, in 1955. Kroc's entrepreneurial drive led to the establishment of McDonald's Systems Inc., which later became McDonald's Corporation over time. Over time, Kroc brought out McDonald's Brothers and aggressively expanded the franchise network, emphasizing standardized operations and quality. Key milestones in McDonald's history include the introduction of iconic menu items like the Big Mac, Chicken McNuggets, and the establishment of Ronald McDonald House Charities in 1974. And significant international expansion started in the 1970s. The company went global in 1965 and has since become a symbol of globalized fast food. The outlook of the company. McDonald's strategic outlook is centered on its accelerating the arches to growth strategy, which focuses on maximizing marketing effectiveness, committing to a strong core menu, leveraging digital capabilities, including loyalty programs and mobile ordering, expanding delivery services, and driving restaurant development. The company aims to create a seamless and personalized customer experience while strengthening its partnership with franchisees and suppliers. The company is also increasingly focused on sustainability initiatives, including a commitment to net zero emissions by 2050 and the development of a more sustainable packaging. Furthermore, McDonald's is investing in its people, aiming for greater leadership diversity and equitable practices across its global operations. They are planning the restaurant footprint to expand to 50,000 locations worldwide by 2027. This signals a strong focus on the future growth and serving more customers globally. Description of the industry that McDonald's is in. McDonald's is a key player in the expansive food service industry, especially within the dynamic quick service restaurant or QSR or fast food sector. This segment of food industry is defined by a business that provides standardized menus, prioritize speed in service, and offer meals at relatively affordable price points. Several key features characterize the QSR landscape. Firstly, high volume is a hallmark. QSRs typically catering to a higher number of customers, particularly during peak breakfast, lunch, and dinner hours. Secondly, speed and convenience are paramount. These establishments focus on efficient food preparation and delivery to meet the needs of customers seeking quick and easy meal solutions. Thirdly, standardized operations are common and often facilitated by franchise models like that of McDonald's. The competitive QSR landscape is intense, featuring numerous global and local brands aiming for customer retention and market share. This includes an array of restaurant types from burger chains to chicken specialists to sandwich shops to pizza outlets. Furthermore, this industry is significantly shaped by evolving consumer trends. As a leading force within this industry, McDonald's is consistently adapting to these evolving trends through ongoing menu and innovation, the strategic implementation of digital advancements, and a persistent emphasis on providing value and customer feedback. Some of the major events from news sources are largest hiring initiative in years. In May 2025, McDonald's announced its plan to hire up to 375,000 new employees across its US restaurants, including during this summer season. This marks the company's most significant hiring push since 2020. The initiative aims to support the opening of 900 new locations by 2027 and to meet increased customer demand during warmer months. The positions are intended to be permanent and not seasonal. The sources are CNBC and usatoday.com. The second new major event, the first quarter 2025 financial performance. McDonald's reported its Q1 2025 earnings, revealing a 3% year-on-year decline in consolidated revenues to $5.95 billion and a 1% decrease in the global comparable sales. Notably, US comparable sales dropped by 3.6%, attributed to reduced spending by the lower and middle income consumers amid inflation concerns. Despite these challenges, the company's loyalty program achieved over $31 billion in system wide sales across 60 markets in the trailing 12 months. The sources are CNBC and yahoofinance.com. Financial statements and ratio analysis. The detailed analysis of ratios is provided in the Excel sheet that we have shown above, the link to which has been shown above. It includes all ratios starting from liquidity to profitability. Let's look at some of the other statements. Based on McDonald's Corporation's financial statements for the financial year that ended in December 31st, 2024, here are a few noteworthy observations. Stable revenue amid market challenges. McDonald's reported consolidated revenues of $25.9 billion for 2024, marking a 2% increase compared to the previous year. This growth occurred despite a slight global comparable sales decline of 0.1%, with US sales increasing by 0.2% and international markets experiencing marginal decreases. The company's ability to maintain revenue growth in the face of market challenges, such as shifting consumer preferences and economic uncertainties, underscores its operational resilience and effective global strategy. Despite this growth in revenue, the company's net income decreased by 3% to $8.22 billion. Strong free cash flow supporting the shareholder returns. In 2024, McDonald's generated a robust free cash flow of $6.67 billion. This strong cash position enabled the company to return $7.7 billion to shareholders through dividends and share repurchases. The substantial free cash flow reflects the efficient operations and prudent financial management, allowing McDonald's to invest in growth initiatives while simultaneously delivering significant value to its shareholders. This is a list of the financial ratios, although a detailed list has been provided in the Excel sheet. I have included a few ratios here anyway, like the current ratio of 1.19, debt to equity ratio of minus 13.68, profit margin of 31.7%, return on equity minus 2.16, price to earnings ratio 27.12, quick ratio 1.18, return on assets 14.89%, debt to total assets ratio 0.94, asset turnover ratio 0.47, inventory turnover ratio 200.18, receivable turnover ratio 10.87. Let's look at a few noteworthy trends. Let's analyze the profit margin and return on assets of McDonald's and identify their trends. In 2022, it was around 25.9%, in 23 was 29.6%, and 24 it was 31.7%. The profit margin has consistently increased over the past 3 years. This inference, this upward trend indicates that McDonald's has become more efficient at converting revenue into net income. It may reflect cost control improvements, increased pricing power, or a shift to a higher margin products and services. Example, delivery, digital ordering. Strong profitability boosts investor confidence and allows for reinvestment or higher shareholder returns. Return on assets. In 2022, it was 12.3%, 23 13.7%, and 24 14.9%. Trend. The ROI has steadily increased year on year. Inference. This indicates that McDonald's is using its assets more effectively to generate profits. The company may have optimized its operations, sold underperforming assets, or leveraged technology to improve efficiency. An improving ROI signals good management performance and strong operation execution. Trend analysis. In comparison with Yum Brands Inc. Yum Brands Inc., often referred to as Yum, is a multinational fast food chain based in Louisville, Kentucky. It is known for owning and franchising popular QSR like KFC, Taco Bell, Pizza Hut, and the Habit Burger Grill. Yum operates a system of over 60,000 restaurants in more than 155 countries. Given below is a graphical representation and the trend analysis comparing the profit margin and return on assets between McDonald's and Yum Brands Inc. over the past 3 years. I have sourced this from macro trends. The profit margin trend analysis. McDonald's demonstrated a consistent increase in profit margin from 25.9% in 2022 to 31.7% in 24, indicating improved efficiency in converting revenue to net income. Whereas Yum Brands experienced growth from 19.37% in 2022 to 22.57% in 23 to 19.68% in 2024. McDonald's ROA has steadily increased over the past 3 years, as we have seen before, whereas Yum Brand's ROA peaked in 2023 at 26.73% but declined to 23.03% in 2024, indicating a potential decrease in asset utilization efficiency. Inference from this trend analysis. Profit margin. McDonald's shows a stronger and more consistent upward trend, reflecting better profitability, ROA. While Yum Brands had higher ROA figures, McDonald's demonstrates a positive and a steady growth trajectory. The cost of debt. Let's have a detailed look into McDonald's creditworthiness based on the debt management and liquidity ratios that we've provided. Analysis of creditworthiness. To analyze McDonald's creditworthiness, we look at the implications of their debt management and liquidity ratios. Debt management ratios. Debt to equity ratio minus 13.68. This is a strikingly negative ratio, primarily due to negative shareholder equity, that is minus $3.798 billion, and it can arise from several factors, including significant share buybacks or accumulated losses over time exceeding the initial capital. Debt to total assets 1.07. This ratio indicates that McDonald's total liabilities are 107% of its total assets. A ratio above 1 suggests that the company has more debt assets, meaning that the assets are not sufficient to cover all liabilities. This is another red flag for creditors, as it implies a higher risk of insolvency in case of financial distress. The liquidity ratios of a current ratio of 1.19, suggesting that McDonald's has $1.19 in current assets for every $1 in current liabilities. And a quick ratio of 1.18. The quick ratio, which includes inventory that is generally considered less liquid, is very close to the current ratio at 1.18. This suggests that McDonald's doesn't rely heavily on inventory to meet its short-term liabilities, which is typical for a restaurant business with a relatively fast inventory turnover. The comments on the bond rating and the cost of debt. McDonald's has a bond rating of BBB plus from S&P Global Ratings. This is considered investment grade, indicating that McDonald's has a relatively low risk of default. McDonald's still maintains high investment grade bond ratings from other agencies like S&P, Moody's, example BBB plus to A range historically, largely because of stable and predictable cash flows. Global brand and market dominance, consistent profitability, and strong interest coverage ratios. The cost of debt for McDonald's is approximately 4.4%. This reflects the annual yield McDonald's pays on its bonds, that is debt. McDonald's can typically issue debt at relatively low interest rates compared to peers in riskier industries. This low cost of capital enables the company to continue financing its operations and expansion through debt. Cost of common equity. The calculations of the beta and the expected return for the stock of McDonald's Corporation are done on the Excel file. Comparing the beta of McDonald's with Yum Brands Inc. According to my calculations, the beta of McDonald's is 0.5556 and that of Yum Brands is 0.77. A comment on the betas. McDonald's beta is 0.5556. This beta is less than 1, indicating that McDonald's stock has been less volatile than S&P 500 over the past 5 years. This suggests that the McDonald's stock price trends tend to experience smaller percentage changes in the overall market than the overall market. It is considered a relatively less risky stock compared to the market as whole. This volatility could be attributed to established market position, strong brand recognition, and a consistent performance even during economic downturns, as it can be considered a consumer staple. Yum Brands Inc. with a beta of 0.77 is still less volatile than the market but more sensitive to market movements than McDonald's. This could be due to its franchise heavy model and international exposure and brand portfolio like KFC, Taco Bell, Pizza Hut, etc., which may introduce variability in performance. Both McDonald's and Yum brands have a beta slower than 1%, suggesting that they are less volatile than the broader market. However, McDonald's has a lower beta compared to Yum brands. This implies that McDonald's stock has been historically less risky and less sensitive to market movements than Yum brands over the past 5 years. So, what would be my choice as a risk averse investor? As a risk-averse investor, McDonald's would be the more suitable choice between the two companies based on their beta values. McDonald's has a beta point 0.556, which indicates that its stock is significantly less volatile. And the lower beta suggests that McDonald's stock price tends to fluctuate less in response to market movements, making it a more steady and a stable investment for someone who prioritizes capital preservation and prefers steady, stable returns. This lower level of risk is highly attractive. In contrast, Yum Brands has a beta of 0.77, which is well below the market, but it is more volatile than McDonald's beta. This implies that Yum Brands is more sensitive to market changes than McDonald's. However, although it might also offer higher potential returns during bullish market conditions, it also carries more risk. Moreover, McDonald's is widely regarded as a defensive stock due to its global presence, consistent cash flows, and strong brand recognitions, which you have mentioned before. These characteristics contribute to resilience even during economic downturns, further reinforcing its appeal to conservative investors. In summary, McDonald's lower beta and stable business model make it a more appropriate choice for those seeking to minimize risk in their investment portfolio. Common stock dividend of McDonald's Corporation. McDonald's Corporation pays dividends quarterly, typically in March, June, September, and December. As of May 2025, the company distributes an annual dividend of 7.08 per share, equating to 1.77 per quarter. This results in a dividend yield of approximately 2.22% based on the current share price of 318.61. Note that the share price keeps on fluctuating. McDonald's has a robust history of returning value to shareholders, having increased its dividend for 17 consecutive years. The company's dividend payout stands at 60.4%, indicating that it allocates a significant portion of its earnings to dividends while retaining enough to reinvest in growth opportunities. For investors seeking a consistent and growing income, McDonald's dividend policy reflects its financial stability and commitment to shareholder returns. Dividend comparison with Yum Brands. The Yum Brands Inc. does pay dividends, distributing them quarterly in March, June, September, and December. As of May 2025, Yum Brands offers an annual yield of 2.84 per share, resulting in a dividend yield of approximately 1.92% based on the current share price of $148.07. This company's dividend payout ratio stands at around 53.4%, indicating that it allocates just over half of its earnings to its dividends. In comparison, McDonald's also pays quarterly dividends, and as of May 2025, it has offered an annual dividend of 7.08 per share. With the current share price of $318.61, this translates to approximately 2.22%. McDonald's has a dividend payout ratio of about 60.4%, suggesting that it distributes a larger portion of its earnings to shareholders compared to Yum Brands. Between the two, McDonald's provides a higher yield and a longer track record of dividend increases, having raised its dividend for 17 consecutive years. Yum Brands, while offering a respectable yield and has increased its dividend for 8 consecutive years. Therefore, for investors prioritizing dividend income and consistency, McDonald's may be the more attractive option due to higher yield and established history of dividend growth. Let's look at McDonald's dividend payments for the past 5 years. In 2019, the company paid an annual dividend of $4.73 per share. The amount rose to $5.04 in 2020, $5.25 in 21, $5.66 in 22, $6.23 in 23, and as of May 2025, the annual dividend stands at 7.08 per share. That's on the capital structure of the company. In the Excel sheet, I have provided a pie chart that was showing the breakdown of the company's capital into different components like the long-term debt, preferred stock, and the common equity capital. McDonald's capital structure shift over the past 5 years. There were several factors that led to a shift in the capital structure of McDonald's over the past 5 years. Let's have a look at a few of them. Firstly, due to increased debt financing for expansion initiatives, McDonald's has strategically utilized debt to finance its ambitious growth plans, including expanding to 50,000 locations worldwide. As of December 31st, 2024, the company's total debt stood at $51.95 billion, up from $35.9 billion in 2022. This increase in debt has been used to fund capital expenditures, which rose from $2.36 billion in 23 to $2.77 billion in 24, and to support acquisitions totaling $2.07 billion in 24, and a significant jump from $245.9 million in 23. By leveraging debt, McDonald's has been able to invest in infra, tech, market development, and diluting shareholder equity. Secondly, due to consistent dividend payments, McDonald's has a long history of paying and increasing its dividends while returning value to shareholders, which is a positive aspect. And growing dividend payouts reduce the amount of retained earnings, which is a key component of common equity. If dividend payments along with share repurchase outpace the company's net income over an extended period of time, it can contribute to shrinking equity base. To maintain or increase dividend payments while also funding share buybacks and other operational needs, the company may have increased its reliance on debt financing, thus altering the capital structure towards a higher proportion of debt. Weighted average capital cost. The calculations for WACC are done in the Excel file. It also contains the cost of debt, the cost of equity, tax rate, and the other variables that were mentioned. And we have used it to calculate the WACC of McDonald's, which stood at 8.78%. Forecasting. Recent developments, strategic initiatives, mergers, and acquisitions. Some of the most recent developments include McDonald's undertaking of significant expansion efforts, planning to open 2,200 new restaurants globally in 25, with 25% of these in US, and its five largest wholly owned international markets. This expansion aligns with company's goal of reaching 50,000 restaurants worldwide by 2027, as we have mentioned before. In 2024, in 2027, in the US, the company aims to open 900 new stores by 2027, supporting by hiring initiative to recruit 375,000 workers, which we've also mentioned. McDonald's is proactively pursuing an accelerating the Arches strategy that emphasizes the 3Ds, that is digitalization, delivery, and drive-throughs, with the addition of an extra D, development, as the fourth D. This includes significant investment in technology, including a partnership with Google Cloud for generative AI solutions to enhance restaurant operations and customer experience, from mobile ordering to kiosks to loyalty programs. Another notable development is the expansion of its digital and delivery capabilities with investments in platforms uh, in investment in mobile ordering platforms like uh, Uber Eats and DoorDash, and AI-driven drive-throughs. To appeal to value-conscious customers, McDonald's has launched the McValue platform in 25, featuring the $5 McDeal and in-app promotions. This strategy is expected to drive a projected 5.1% increase in total revenue for 2025. Additionally, McDonald's has ventured into plant-based offerings such as the McPlant Burger to cater to health-conscious and environmentally aware consumers. On the mergers and acquisitions side, McDonald's has been relatively conservative but has made targeted acquisitions to bolster its technology stack, such as the purchase of Dynamic Yield, a personalization software firm, to improve its digital menu boards and customer engagement. Franchisee acquisitions in key markets have also allowed the company to consolidate control over underperforming locations. Let's have a look at the legal and the regulatory challenges. McDonald's has been involved in legal actions. Antitrust lawsuit filed in October 2025 against major meat packers, Cargill, JBS, Swift Beef Company, National Beef Packaging Company, and Tyson Foods, alleging a conspiracy to fix beef prices. Additionally, the company has faced scrutiny over no poach agreements in its franchise contracts, through it, though it obtained a favorable judgment in 2022. McDonald's has a history of legal battles, including those related to trademark infringement, like the Mac prefix, the labor practices like the wage and hourly disputes, worker safety, discrimination, claims from franchisees. While many of these are going or have been settled, they can incur significant legal cost and reputational damage. For instance, past agreement with CPSC regarding playground safety, or the settlement of a class action lawsuit for wage hour violations highlight the continuous need for vigilance in the company. Regulatory environments are also changing, with increased focus on areas like consumer health, like calls for healthier options, potential for health warnings on fast food ads, environmental impact, example, net zero emission targets by 2050, sustainable sourcing, and anti-competitive practices. The company's vast global footprint means it must navigate diverse legal and regulatory landscapes, which can vary significantly by country and even by local jurisdiction. Geopolitical events such as the complete withdrawal from Russia also demonstrate how international sanctions can severely impact operations and stock performance, highlighting the need for a robust risk management. The future prospects. McDonald's offers a mix of opportunities and risks. On the positive side, strong brand loyalty, global footprint, and an aggressive digital transformation position that makes it well for the long term growth. The company's focus on franchising 95% of stores. For example, it has franchised 95% of stores. This provides stable cash flow and reduces capex risk, innovation and menu diversification, including plant-based and premium offerings, which could attract a broader customer base. However, macroeconomic headwinds such as recession fears, supply chain disruptions, and geopolitical tensions pose threats. Consumer preferences are also shifting towards healthier, sustainable, fast casual options, forcing McDonald's to balance its traditional fast food model with evolving demands. If the company fails to address labor and regulatory challenges effectively, its margins and reputations could suffer. Conclusion. Based on the comprehensive analysis of McDonald's Corporation, a recommendation is appropriate for the stock. Well, two reasons support this judgment: stable financial performance and strategic growth initiatives with macroeconomic headwinds. McDonald's demonstrates strong operational resilience and a commitment to shareholder returns, evidenced by consistent increases in profit margin, 25.9% in 22 to 31.7% in 2024, and a return on assets of 12.3% in 22 to 14.9% in 2024. Additionally, its robust free cash flow of $6.67 billion in 2024 enabled the company to return $7.7 billion to shareholders through dividends and share buybacks. The company is accelerating the arch strategy, is focusing on digitalization, delivery, and significant growth, global expansion, aiming for 50,000 locations by 27. Positions it for long-term growth and enhances customer experience. This proactive approach to evolving consumer trends and technological advancements suggests continuous profitability and market leadership. However, the company is facing macroeconomic headwinds such as reduced spending by the middle and lower middle income consumers due to inflation concerns, which led to a 3% decline in the consolidated revenues and a 1% decrease in the global comparable sales in Q1 of 2025. While the economic, while the McValue platform aims to address value-conscious consumers, these economic pressures could temper short-term growth projections. The second reason why we should hold the stock is strong shareholder returns and defensive stock characteristics, counterbalanced by high leverage. McDonald's generated a robust free cash flow of $6.67 billion in 24, enabling it to return $7.7 billion to shareholders through dividends and share repurchases. Its lower beta of 0.5556 indicates less volatility compared to broader market, making it an attractive stock option for risk-averse investors. However, McDonald's has significantly increased its reliance on debt, resulting in a negative debt-to-equity ratio of minus 13.68 and a debt-to-total assets ratio of 0.94. While the company maintains investment-grade bond ratings of BBB plus from S&P Global Ratings due to stable cash flow and market dominance. This high leverage could be of concern if market conditions deteriorate further, or if interest rates rise substantially, potentially impacting the future financial flexibility. My final thoughts are that McDonald's remains a fundamentally strong and a stable dividend stock-paying company with a proven ability to adapt. Its current valuation at a P ratio of 27.12 and high debt levels reduce the upside potential in the short term. Therefore, investors are advised to hold their current positions and monitor performance and macroeconomic conditions before making any additional purchases. Thank you.